Prices are down as much as 30% in certain regions of Toronto. Yeah, wowza. Stay tuned to this month's Market Watch to find out exactly what region that is. Promise you, it'll be worth it. Good day, Toronto. Welcome to this month's Market Watch. And oh yeah, baby, we got a big one. There's a certain region that is down 30%. I'm not gonna, hold it back from you. It's King City. King City is down 30% from the peak of the market in February 22. That is nuts. Now, obviously, I'm going to go through a lot more of this data region by region with you, and all the data I'm showing you right now, it'll be available in the link in the description below. So you can just click down it, put your email in, and I'll send it to you free of charge because there's no point in hiding all this data. I don't know what this whole Trump thing about is, but I want to show you kind of what's happening because everyone just reads headlines and tries to apply, what they're reading into the region they're in because every single area is different. Like if you talk to a Toronto only agent, and they look and say, hey, the East York area or like Toronto Central, yeah, it's fine. Prices didn't really fall. Totally true. If you talk to an agent who works in, say, like Brampton or Mississauga, yeah, prices are down like crazy. Or if you talk to an agent who only works in York region, like Vaughan and King City, it is rough over there. Yeah, so I'm going to get into that in the later half of the episode, but I'm going to give you a little bit of the summary of what's going on right now, right? So you can see over here, this is kind of like my big data chart, just like a focus of it. And this is kind of like what's happening at the kind of like, high bird's eye level view of data I track. So you can see here the May data came out and we're at $1.121 million average, down from 1.35, which is the peak in February. Like I was saying, like a last market watch, right? You can see that we went up essentially like 14.5%. So I'll round it up, call it 15%, right? But now ever since March, and we kind of saw the change in end of February or so, we're down 2.5%, 3.5%, and then 3.3% for a total of 9.41%. Oh yeah, we're down that much. Now the crazy thing is if you look at the months of inventory, which is kind of like the metric I use, that indicator of kind of where prices are going to go. You can see that right now we came into like 0.9%, which is like, for every one property out there, it's going to sell right away in the month. But right then we went to 1.6, now we're at 2.1. And at the rate of, acceleration we're going at, we're very much going to go into a very balanced market very soon. So I was saying like last week's episode, if you missed it up, check it over here. If the rate hikes happen in July, we'll probably come to like 2.5, maybe 3 months of inventory. And then we'll see how much inventory remains before we're going to September because there's no rate hike in August, right? So if we're going to see a rate hike in September and they're kind of like telling it, saying like they're going to make it happen in September, then yeah, we can probably see months of inventory hit 3, and we probably won't hit 3, haven't seen like 3 in a very long time, right? Like to give you any idea of how serious 3 in Toronto is basically pandemic. That's how bad it is, right? So like we went from, pandemic induced lots of inventory to interest rate induced a lot of inventory. But at the same time, and I'm gonna get into this a little bit later, the data is that if people don't have to sell, they're not gonna sell, right? So I'm just kind of monitoring how much new listings come out because the active listings is actually still very low right now, right? So I have a couple of charts here I'm gonna show you. So this chart over here is all the sales that we've seen in May up until 2008. But what I did is I ranked them from the most amount of sales to the lowest amount of sales. And you see where we are in 2022? We are the second lowest amount of sales ever since 2008, only behind the pandemic year. That's wild, right? And we were not that much far off than 2018. And everyone always forgets, maybe in hindsight, for 2018 was a really bad year because rates went up and it was just the tail end of the stress test, right? So it's very similar to what we're seeing right now. Obviously, I'm not saying that we're going to be like 2018, we're going to get over the hump in like a year and a half, but I'm just saying that a lot of people don't remember how bad it was in 2018. And there was a lot of talks similar to like what we're seeing right now. It's just, I think the pandemic and the price increase has magnified it so much more, right? So when you look at this, we're really bad right now. We're really, really bad. Now, if I put this in kind of like a graph form, the orange line over here is the average in the last, doing my math right now, 14 years, right? So it's 9,700 sales on average in May. You can see we're pretty consistent in like the first little bit. And then things kind of start changing when we upped the immigration in 2015 and start peaking. And then we had 2017, which is essentially right after the foreign buyer tax. 2018, like I was saying, after the stress test, it was really bad. Then we got the pandemic one, and now we're over here. Still below average. We're well below the 10-year average, right? And that's really bad because that means there should be a lot of inventory building up, right? So this is why I got this chart for you, which is the active listings. And the active listing essentially is the amount of listings at the end of the month, like what hasn't sold. This includes new listings or stuff and it doesn't include stuff that came on market and sold, or how much stuff is left over. And that's how months of inventory is derived from. So you can see right here, we're the bottom fourth in the amount of active listings at the end of the month. So there's two ways you can argue this, and I don't have concrete data to say it. So like I said, you can take data and you can argue it whichever way you want. But one, on the bearish side, I would say, hey, look, we are just coming into a bear market. People are slowly not buying things right now. So the inventory is slowly building right now. So that's why there's not much inventory at the end of the month, and we see 15,000 listings in GTA. Bear side. If I was a bull, I'd be like, hey, look, we only have 15,000 active listings. We really should have a lot more if we were in that bad of market. Hey, look at 2017. There was 25,000 listings after the foreign buyer tax because nobody bought anything. Why aren't we seeing that much listings? Do you see what I mean? Like, I can argue both sides if you want. Like, as a good sales guy, I can tell you whatever it is. I just give you my personal opinion about what actually is. And right now, my opinion is I don't know. I don't have enough data. This is the first month of seeing it like this, right? So I'll, stay tuned, like and subscribe. Obviously, I'll show you what the June one looks like. But at the moment right now, it's very hard for me to see whether the inventory is increasing really rapidly or people aren't selling. And right now, like, just hearing anecdotally and seeing some data, it's kind of like a little bit of both, right? Like, if you're a seller, if you don't need to sell, I'm not going to, right? But if you're going to sell and buy into the same market, cool, you can do it. And I've always advocated for selling first, right? So this is actually an advantageous market to them. But if you're an investor, right, you're looking at this and you're like, oh, this is a terrible market, right? But you can find people who can buy deals and you can buy something, right? So it really depends on who you are as a person that's transacting in the real estate world, right? Like, if you're only kind of looking at this from like one frame of mindset, then obviously you can stick to your frame of mindset and just don't do anything or do something. It's totally up to you, right? And that's what I'm saying. Like, I want to put the data out there for you to kind of interpret yourself. I'm giving you kind of my 2 cents on it, right? But obviously you have your own, and again, be free to use the data. Now, I kind of mapped this out in the chart form, similar to the sales, right? Which is basically see that the active listings is really low. It's actually really low in the last 15 years or so, right? So like the average is about 15,000. We're well below that. We're at, I think, 12,000 I was saying earlier in the last slide. Oh, sorry, 15,000. Yeah, so we're just a little bit around average, right? So, it's one of those things where, like I was saying, like, you can argue on both sides, and it just really depends on what you're going to say. But what I can say is that when I was looking at the data, which we'll see a little bit later, the inventory in the 416 condo actually creeped up quite a lot. Like, we're coming up to 3 months right now, especially in the COA area, which is like the East Downtown. I'm not really sure why, but the inventory is building up over there. And the detached market in Toronto is slowing down. And what I'm seeing in the suburban areas of detached, the new listings are slowing down, right? So, I had this theory where a lot of properties are coming down in price because they have to close something else and they're forced to sell for less, and they, take an L on that. But I think it's slowly coming true, but I think we would need to see until like maybe end of July or so to see how that all plays out, because all the closings should wrap up, and then the demand, from the demand side, if anyone had like a locked in fixed rate still at 2%, that stuff should have worn off. So that's what I'm saying. Like, right now, a lot of people are still in the wait and see mode to see what's going to happen and which side it's kind of trending. So, it's not the world is falling down. It's also not like things are going to shape up really well right now. It's just, it could go both sides right now. And there's a lot of external forces that are applying pressure to the market right now that, no one can control, like war, right? So those are the things kind of, got to look at for it. But ultimately, what I will say is the sentiment is very bad, okay? Now, the third one, I just threw this in here for you guys because I was just looking at the data. So here's a chart of the average price in May, right? And I put the number here. You can basically see that we're over here, still at the highest ever. Are we going to come all the way down over here, right? Like some people want, or we're going to continue going, peak down a little bit and then go back up. Again, nobody knows. But what I'll say is, how a lot of people are comparing us to like 2017, we kind of peaked and then we kind of like leveled off because 2017 had the foreign buyer tax and they had the stress test, and interest rates went up until like 1.75%, which is the highest, right? And then they dropped it back down because the economy was tanking. There was a whole bunch of crap going on in the repo market. Anyways, I'm not going to get into that, right? So that stuff was happening there. So you can see basically in 2017 in May, we peaked at like 862,000, right? And then basically right after that, the year after, when you put year over year return, which kind of should level out the monthly kind of changes, we dropped to 803. And it really took until about May 2020, which was right where the pandemic was before the prices caught up. And this is where in May and June, a lot of the prices for like the freehold homes in the backyard start going up in price, right? So it kind of took us like, call it 3 years for us to kind of come out of the interest rate hike, the foreign buyer tax added on, and also the stress test, right? And we're up here, we're seeing interest rate hikes. I don't know what their kind of government intervention they come, but because we're at a more higher debt to GDP ratio from just most people, it's gonna have a larger effect. Like I was saying earlier, right? If you owe 10% interest on $100, it's $10. But if you owe 1% interest on $1,000, it's $10 as well. And if that base amount keeps increasing, it's going to get worse. And that interest rate is not 1% anymore. It's going up to 2%, right? So that's kind of the things that you have to watch out for, and why there could be, bigger swings. Like, I don't think there's a soft landing with Engineer. I said that last video too. Like, it's just going to be, broken or fixed, broken or propped up. That's kind of what I think is going to happen. So this is the type of content you enjoy. Make sure you help us spread the knowledge by smashing that like button and subscribing to the Prime Profit channel, because every single month we make awesome data-oriented analytical videos like this so that you can understand what's happening in the market. It takes me a little bit longer to put together, but as a nerd, I really enjoy it. And that's kind of part of my shtick, So if you do want to work with us, really nerdy realtors out there, and you want to buy and sell, or just kind of get ready for when it is a good opportunity next time from, analyzing all this data, you can book a strategy call with me using the link right here. It's www.chatwithzen.com. Now, on to everybody's favorite, at least from last month, they were telling me, the segmenting each and every single region to say, ha, that region got smoked much more worse than ours. So let me pull up the data for you over here. Now, again, all of this data available for you. Just click on the link below. So if you can't see it, or maybe I'm going a little bit too quickly, it's all there. I just want to highlight a couple things for you, right? So what I did different in this month is I took the May data and I applied it to the April to give you like a month-over-month change, which you see over here on the right-hand side, right? So this is April data, this is May data, this is the month-to-month change. Now, what I did do is, obviously, when the previous chart you saw that I had the highest peak pricing was February, so I took it from what the lowest, what the change in price was, right? So you can see that essentially everything on the left-hand side here is red. So there's not a single region that has been unscathed from the peak of the market. Because obviously, if you call it a peak, everything compared to it is going to be lower, right? Now, one of the interesting things I'm going to note is that there are certain regions that have a lot less listings than from the peak, which is kind of strange. You would imagine they'd all be green, meaning they got more listings, they got more active listings, and the months of inventory has actually increased, right? So you would imagine that that's not kind of really what happened. Now, here's kind of the fun part, right? Like, we can look at the month-to-month data. You can say, like Oakville, which actually quite surprised me. It kind of got smoked in the face for detached homes. It's down like 10% month over month. I didn't see that coming, because I was just saying last market watch, like Oakville is holding up really, really well. And now it just got smoked 10% last month, which is one of the higher ones, right? And then same thing in some of the Durham region, when you got Oshawa, Pickering, and Sugog all got smoked by 10% as well, and so did Orangeville. And again, like, this is 1 month's the data. Don't take it like if the world is falling. I'm just showing you too, because everyone's very curious about this stuff, right? But what is fun, and I'm going to do this, is I'm going to show you who had the biggest price drop from the peak, right? So, and this is where I started the video. I'm saying like, oh look, certain regions are down 30%. Looky right here. Who is down 30%? King City. This is north of Vaughan. It's like a really big region, and they have like these massive homes, and yeah, they got smoked by 30%. It is really rough up there. It is really rough. I remember in 2017 when the foreign buyer tax came, they also got absolutely crushed too. So like, this is what I just always say to a lot of my investor clients, right? Like, if you're going to be investing, you want to be investing in cash flowing assets, and like real estate, as illiquid as it is, you want the most liquid type of real estate, which generally tends to be the entry-level single-family homes. And the reason for that is because when you're buying these massive mansions in King City, it's a luxury purchase. So when a recession comes, and I'm pretty sure we're in one, we'll look back and we'll see that we were right in one. It's the people who have really high-end stuff that stretch themselves are going to downsize, and they're going to downsize to things they don't need. It's kind of like if you have a really expensive car, when money's tight, you're just going to get rid of that car, right? And go for something, more basic, call it your, I don't know, whatever, Toyota Corolla or a Honda Civic, right? So that's kind of why they got absolutely crushed. It's really bad. The next one you got here is Whitby, then you got Sugog and Oshawa. Again, I'll put all of this in the data for you in the link below if you kind of want to go through it. But what I was saying earlier, Toronto Central and Toronto West has kind of held up the best, right? So they're only down about like 1.15% and 2.84%. And I'll say this again, this is kind of like a participation award. It's like a consolation prize, because like it depends on where you kind of like are holding that asset. If you bought a Toronto property in say February, cool, it didn't come down as much. Wonderful. But if you've been holding on to a property since 2020, it's also appreciated the least. So therefore it's decreased the least. But if you average it out, it's performed the worst, right? So like you can't kind of like, pick and choose and make fun of a certain area and it's, burning down or it's the best performing one. It's just depending on the duration in which you're holding that asset and what the reason is, it's very like nuanced, right? So yes, Toronto Central and Toronto West have been doing the best, and that's what I've been saying to a lot of clients, right? Like anyone who's looking for a home, especially if you hit the holy trinity of schools, you're looking for those areas, generally they're pretty recession proof, right? It's just like, you haven't really, if you didn't buy into it earlier, it also hasn't gone up as much as, the other surrounding areas, but that's all like kind of comparison, right? So that's just something fun, I kind of wanted to point out to you, right? All right, now let's go into the detacheds. So the detacheds, I've also always said, like it's very hard to arrive at all of these numbers because there's the sample size for semi-detacheds are not that great. They're generally a lot more detacheds than condos, than towns, than semis. And semis, you can see over here, like even in Toronto, there was like 300 sales last month. It really generally is not that great of an indicator. But again, let's go through it. For fun, you got East Gwillimbury semis got completely crushed. You are looking at right here, the Newmarket semis also got completely crushed. And, I think last month I was saying, you got to watch out for all the properties coming down in price because I think the semis in town should come down in price the most because those are the people who, if they need to sell, they are kind of, I don't want to call it distressed, but like they need to sell at a lower price because they need the funds from like semi and town because they bought a detached home to kind of live in, right? So they're going to take a little bit of a loss on that one, so it's just like close the other one. And we're seeing a lot of that play out in the industry right now with like under appraisal, it's getting extensions and all that stuff, right? And I'm hearing it all over the place. So I wouldn't be surprised if there's a lot of stuff that's coming down in terms of semis. Now, but just for fun, let's see who's performed the worst and who's performed the best, right? I've actually looked at this, but I just don't remember which one it is. So you got over here, Pickering, semis smoked the most, 26, not as bad. Like King was by far the worst, like 30%, right? You got Georgina, this is up in New York region. Then you got the whole Durham region as a whole, and then Ajax, Burlington, and the Oshawa semis that all come down, right? So you can also see here, like I'm looking at a lot of this months of inventory. It hasn't kind of increased as much as what I would imagine to be. Like I would thought I would see 100% over here, meaning like the months of inventory increase, but they're all still kind of around like, the high 50s to 60s, right? With some of them a little bit of an outlier. Whereas like if you look in the detached here, you don't have as much of a months of inventory increase. Like I was saying, right? Like there's not as much stress to sell these detached homes as there is to the semis and towns, especially like if you're caught in that specific situation where you have to sell now, even though you bought first, right? And then same thing with towns. Towns very similar to semis, right? A lot of prices are coming down. Just ignore this minus 25 in the month because there's only 11 sales. That's what I was telling you, like the sample size is very small. Yeah, so if we pull it from the peak, you can see that the worst performing one, again, is Georgina, but sample size is very small. Then you got the Dufferin County, Orangeville, Burlington, Whitby. This is really bad. Whitby seems to hit like the top 5 in almost all of every single one of them. Yeah, I can see it. Whitby's like close to Toronto. It had a huge price run and the homes are really big there. So like they're not necessarily just like entry level stuff. So like if you're north of Rosslyn, those homes are ginormous, right? Like they're really big. Then you got your condos here, which is kind of like the talk of town, saying condos are performing the best right now. And yes, it is true, it's performing the best. And what that basically means, it's dropping the least because it hasn't dropped the most, right? So you can kind of see over here, there's still some like pockets that are green right now, right? You can see like the Markham condos have actually gone up. And when I was looking at kind of like the more, not as micro as this, but like the micro market, the 905 condos actually went up because that's the lowest price point for you to get into the market, right? So I'm actually not surprised seeing that prices went up last month by a little bit, which is ironic over here, like with Church-Stouffville. Condos are up 6%, but like the detached freehold market is down like 24%, right? So there's a big dichotomy in terms of, not saying the region is bad, it's just like what people are looking for right now in the kind of recession-like kind of market, right? So when you kind of rank them, it's going to be very different. And obviously most of the condos are focused in on Toronto area. So you can see over here, like the Toronto West is doing pretty well. But some of these Toronto Central, which is CO1, CO8 has come down a little bit. And the East has come down quite a bit too. When you look at just CO8, the inventory is like at 3 and the prices are down like 5-6% just on those CO8 region. It's really strange. I haven't really deep dive into it, but like something's going on over there. The one thing that I was going to point out to you guys, kind of have to watch out for is Vaughan right now. The amount of inventory in Vaughan as condos, which is like the Highway 7 and Jane area. It's quite high. But the strange thing is like prices are still going up because it's quite affordable. It's close to transit, right? And when we were investing in the VMC area like years and years ago, it made total sense because you were like the first, call it 10 buildings. But now there's like another 10 buildings being built, and there's going to be another like 20 being scheduled, right? So at some point, I think that area is going to be like overly densified is the word. Overly intensified. There's too much stuff there going on, like in terms of condos. So I would watch out if you're kind of as an investor looking at that right now. But if we were to rank the worst performing to best performing condos, you can see that the worst performing one is Halton Hills. Then obviously you got Milton and Brampton. And I've always said this, like if you're buying a condo, you really shouldn't be buying a condo in like the suburbs where there's no density that is required of you to get there. Like I get it if you can't afford a home and you want to be close to family and they live in the suburbs, sure, go for it. But really it doesn't make sense. Like even like when I look into like the 905 regions, like Pickering, Richmond Hill, like even Markham, I don't think they personally make sense despite prices going up. Like if you're going to buy a condo, you need to be transit oriented. That's kind of my whole thing. So hopefully this kind of gives you an idea of what's going on. Like obviously depending on what region you're looking at, what micro market you're looking at, your numbers could look worse, but obviously King Detacheds got like socked in the face the most by 30%, right? So I feel bad for anyone who bought a property in King at the peak of February in 2020. But again, at the end of the day, like this is all very temporary, right? Like trend starts with a month. But a month doesn't make a trend, right? So I do think there's a little bit of like price discovery or like prices going down because the market's changing right now. But it's not like it's the end of the world, right? Like with real estate, if you're an investor, if you're holding onto the property and the cash flows, who cares? If you're living in the property, just stop looking at the prices because it's gonna make you sad, right? It's kind of like buyer's remorse. Like, oh, if I bought this like, 10 years ago or if like 10 months ago, probably a lot better. So it's the whole comparing yourself to what the other things are going on, right? And I think as Torontonians, we talk about real estate pricing too much without kind of understanding the nuance and the context into why people need to talk about real estate, right? So if you're not an investor and you are just not in the market to transact anymore, like this is all irrelevant to you. It's just kind of like gossip, and people like gossip, and Torontonians like real estate gossip. So maybe that's kind of my thing. So if you are looking for some help from a real estate side, whether you're buying, selling, or investing, and you want to know when we think it's opportunistic to kind of get in the market, and you want to kind of get the ball rolling so that you have your ducks in order so that when the opportunity comes, you're ready to pull the trigger, you can book a strategy call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.